it is it? Wait, what? I'm on. Okay, yeah. CPI week. CPI week. Okay. So I love CPI personally. Last week was NFP. Last Friday. I do not fuck with NFP. Okay, but I love CPI week. So CPI is on Tuesday. Cool. Monday, no news. Wednesday, we have PPI. Thursday, retail sales. And Friday, no news. Okay. So, all right. So that's the Forex Factory. So that's the map for this week. Before we get into that, just some quick news. So we did talk about Spirit Airlines last week. And so, there's been some updates. There's been a campaign to revive, Spirit Airlines. So, Spirit Airlines shut down on May 2nd after a failed government bailout capped years of mountain losses, leaving passengers stranded, workers laid off, and inspiring a viral grassroots efforts to buy and relaunch the carrier as Spirit 2.0. Okay, so that's very interesting. Spirit
Spirit
ceased all.
2.0. Okay.
Yeah. So, what I'm saying? Maybe new planes, better seats, more room, who knows? Spirit ceased all operations after negotiations for roughly 500 million. Federal rescue broke down amid resistance from key bondholders and internal doubts within the Trump administration. All right. The airline had been weighed down by heavy debt and pandemic era losses, using Chapter 11 twice in less than 2 years before finally running out of options. Wow. So right now, this Spirit 2.0 crowd fund push. So some content creator named Hunter Peterson launched a Spirit 2.0 campaign to buy Spirit's assets through small public contributions, modeled loosely on the Green Bay Packers community ownership. Within days, the effort drew hundreds of thousands of non-binding pledges, totaling hundreds of millions of dollars,
Oh, wow.
but no money has yet changed hands, and it remains uncertain whether a serious bid can succeed in the upcoming asset sale. So that's very actually interesting. Okay, so it looks like clearly everyone is missing Spirit already, with them being an affordable airlines. And like I said last week, Spirit Airlines have never had a crash. Okay, in all the years they have been operating. So it seems that people are trying to bring them back. So that would be very interesting to
Dude,
see.
let's talk about though. Like, I didn't even know that's going on, but $100 million raised. Like, does it say the exact amount? Like, do you know the exact amount?
Nah, it doesn't say the exact amount. Just hundreds of millions of dollars.
And they're trying to do it through a small public fund. So
Yeah.
essentially, the public will essentially own Spirit. Is that what they're trying to get
Jeez.
at?
Possibly. That's crazy. That
Yeah,
would that, that would be a first.
I don't know. My thing is, I don't see how that, like, and let's just say they raised $100 million. They still got to raise 400 million more. So, and
Yeah.
then who like who's gonna benefit from it, right? Like, if the public raises all the money, like, what happens, from there, if we're to revive Spirit? Like,
Yeah.
do I get some perks? Like, do we become board members? Like, so I just think, just hearing it, haven't looked too deep into it, I feel like it's a waste of effort, to be honest with you.
Yeah.
Yeah, I could just let Spirit die, man. It's okay. Sometimes
Yeah.
spirits gotta go to where they belong.
Yeah.
And I think Spirit Airlines over, bro. That's kind of ridiculous that they're
Yeah.
doing that. And I mean, I wonder if there's anything that mimics this in history. But if not, then I really think that this is just a waste of effort, to be honest with
Yeah. Yeah. No, that's crazy, man.
you.
Many
Now they're gonna
people
have
are
to refund everyone their money back. Like, if you put money in that and it doesn't do
exactly,
anything, like, where does the money then go? I better get a
exactly,
refund.
exactly,
I'm not
exactly.
doing that. I'm not supporting that person. I'm
It
not
looks
gonna.
like Peterson proposed that if one-fifth of Americans contributed $45 each, roughly the cost of a cheap Spirit ticket, the airline could be revived as a public held community owned carrier. That's very interesting. Yeah, this never been done, to my knowledge, so might fall through. But yeah, so quick news on Spirit. I think that's all I got. So let me go ahead and dive into these
Before we
charts.
do that though, like, what about
Go ahead.
straight up Hormoz? I think
Oh
I
yeah,
was
what is
looking at some things, and obviously it's there's some traffic going through here and there. Some U.S. ships or whatever are getting attacked, but nothing major. I think with what's going on, and the Iranians already said this before. IRGC said this. Those are the ones? They are the ones that are in lead. They said essentially the USA is not going to get anything diplomatically that it didn't get militarily. So
mm-hmm.
I don't know. Like I know Trump trying to bring this war to an end, but I feel like our efforts were just essentially wasted. Like they did do a good job, I guess, shutting down some of their nuclear progressions and nuclear enrichment stuff going on. But I think now they made Iran actually more empowered because now they know. Obviously, they already knew it before, but now we've seen how they can really affect the global markets, the economies with oil prices by just shutting down the Strait of Hormuz. So
Yep.
if we do leave them alone, if we do come to a conclusion, because I think they're getting close to a deal according to Trump. I wonder when the U.S. withdraws, do they create more chaos? What happens to oil prices? I mean, it's still just a long game, and I feel like we just got ourselves in such a messy situation, and
Yeah.
that being cleaned up is probably going to take a long time. So,
Yeah.
anyways, just and then we're just gonna be always worried about oil. Is oil price just go up one day? Does
Exactly.
Iran decide to shut the Strait of Hormuz? Like, it's gonna be a lot, I think, in the near, especially with the World Cup coming up. USA being 250 years this
Yep.
year.
Yep.
Midterms. I think Iran would be. It'll be so messed up. They come to a deal, then it's time for midterms, and Iran does something, closing down the strait again, dude. Like that,
Yeah.
you gotta understand. That's gonna affect the elections, and obviously it's gonna make Republicans even lose further if they
Yep.
if they come up with a deal they agree upon. These are terrorists that they're freaking negotiating with. Who's to say they can't say, all right,
Exactly.
our turn to mess with the USA and Trump? We came to this agreement, but now it's the midterms, and now we're gonna shut this stuff down again.
Yeah.
Crazy.
Yeah, it's a lot of back and forth, man. They really just need to like come to a conclusion, bro. We just need world peace, man.
100. I'm tired of these oil prices and gasoline going higher, man. So and
Yeah.
they also say like the prices of goods and services, they're gonna be higher in the next coming months because the price is already baked in. Meaning, if farmers, for example, food, we're talking about food, if farmers already had spent way more money on fertilizer and stuff that require oil, they already spent that money. So when those crops mature and they're ready for a harvest and they're trying to deliver to the US public now, they're gonna add an increase in cost. So that's already baked in regardless. You know what I'm
Hmm.
saying? It's just like
Yeah.
if you ran a company, if you ran a farm and you had to buy stuff more expensively, things were more expensive, like oil, like fertilizer,
Yep.
you're gonna sell it for a higher price. Even if the
You have
prices come down a month later, you already baked in that cost
Yep.
to the public.
Yep.
So these are things we're gonna face, um, going into next coming months. I won't be surprised when you see food prices higher. They're already baked in at this point.
Yeah. Agreed, man. Price is higher, but paycheck's still the same, man.
Crazy,
So
bro.
which is why you gotta learn how to trade, man. You gotta outpace inflation. You gotta outpace all these things. Okay,
Yep.
so alrighty. All right, so let's go ahead and jump into the analysis. So two setups I'm really looking at this week. Think I have turned bearish on DXY. I'll leave that for Colossal to break down. But really quickly, I am looking at US 30. Okay, so I'm gonna log this really quickly. All right, so on US 30, I'm saying that we are still bullish. Right now, we have created a daily fair value gap with the Friday close. Where's the daily chart? All right, here's the daily chart. So we created the daily fair value gap. You can see that this weekly fair value gap is still holding support and it's pushing price up. We have equal highs up here. Okay. And with the dollar being bearish, I see US 30 maybe retracing somewhere in here. Okay, we can maybe get that low of the week, Monday, Tuesday, and then maybe Wednesday, Thursday, we get that rally up, and then Friday will probably retrace and close. So let me pull up the charts. US 30. All right, so quickly on the hour, I'm just gonna run through price action last week. So last week, we opened up Sunday. Okay, I talked about I want price to retrace simply because, guys, from low to high, we always want to buy below the 50%. Price dips below the 50%. We have this nice 4 hour inversion for value gap right here. Okay, price comes straight into that, and price also hits the optimal trade entry to 70.5% level. Okay, I was able to capitalize on buys on Monday. Okay, and TP somewhere up here with the daily for value gap. Obviously, I wish I held because this was really the low of the week, and price bought all the way up to go ahead and take previous weekly highs. Okay, as soon as price took previous weekly high, okay, you can see how we have this high, price drops, makes another high before we hived out to big down flush. And this flush was anticipated because from low to high, once again, guys, we're always waiting for price to come beneath that 50% or to the 50% level. Okay. So now with price sitting here, you can see how we have now created equal lows on the hour chart. If I go to the daily chart, you see we have this nice daily fair value gap. Okay, that price kind of inversed many times. So we have this daily inversion as well as this daily fair value gap right here. Okay, so I'm just going to delete that. I'm just going to keep the inversion one. And once again, guys, I'm simply waiting. If I go down to the 15-minute chart, we've created equal lows. Okay, so I'm simply waiting for price to drop. Okay, somewhere in here. Once price drops somewhere in here, I'm going to gauge if we start consolidating. Okay. We start consolidating, building up. We have something like this. And then, you know, once we have that market structure shift on the 15-minute or the 5-minute, I will be looking to position myself in some buys. That is if price is truly bullish. And I'm really going to try this week. So my focus this week is really to try and catch the low of the week. And obviously, I'm going to take partials. So let's say we get in buys here. We have easy partials we can take off here and here. But the idea is I really want to practice leaving runners and trying to catch the low of the week and TP at the high of the week. Okay, so that's my focus this week for US 30 buys. And once again, I'll let Colossal break down DXY, which will affirm US 30. Let me quickly go to gold. So gold, same thing. So last week, let me go to the hour chart. So last week, you see that Sunday opened up right here, okay? And you can see that we had automatically had these equal lows right here, okay? So what does Sunday do? Sunday immediately just drops, okay? So no chance. Either you knew to get into these sales when this market's open or you missed it. A clean drop all the way down, $133 flush.
If you're
And
the
then
Trump
right after,
administration, then yeah, you would know to
yeah.
get in.
A lot of inside trading, man. They need to get arrested.
I ain't saying that, but shit.
I need to get arrested, bro. It's not fair.
It's not fair.
Um,
It's not a fair game. It's rigged.
so Monday creates that low of the week, and we start, just climbing our way up. Okay, slowly. So this, these buys to me were kind of hard to catch, but after looking at silver, we actually had a beautiful SMT, and I'm gonna show you guys that really quickly. But this right here, guys, if you see this candle, okay, I remember this candle. This is when Trump talked about, damn, what did he talk about? A ceasefire or
Project
Project
Freedom
Epic?
wasn't that beginning of the week?
Yeah, it's like Project Epic he talked about. So just guys, randomly Asian session, Trump tweeted. As soon as he tweeted on Truth Social, we had this big rally. It just took off. Okay. So which is why I say, with Trump being president, you got to stay on your toes. And if you don't have Truth Social downloaded, just go ahead and get that. Okay, I have my notifications turned on. So at the moment he tweets, I get that notification. And you just have to be aware of what Trump is talking, since he's president. But let me quickly show you guys the SMT on silver. Mm, okay. All right, so this is silver. Okay. So you can look at gold, and guys, as I'm over here, you see that silver down here is the same time. Okay. So pay attention to, as I'm here, look, analyzing gold here. I want you to be looking at silver down here. So you can see how silver, first of all, had this low, had this high, lower high. This lower high pushes price down to make a lower low. If we are truly bearish, this low should not get taken out. Okay. You see this low getting taken out right there. Structure shift. Okay. With that, low to high. Okay. And look how silver, boom, takes out this liquidity point right here. Let me zoom in. Takes out this liquidity point right there. Boom. And look at how price comes into this order block and is now dancing at the optimal trade entry level. Okay. At the same time, guys, look, at the same time that silver is at the dancing at the optimal trade at the OTE, the 70.5% level. Okay, and we have already had a structure shift on the 4 hour. This is not the 5 minute, this is not the 1 minute, this is the 4 hour time frame. Okay, because of this, at this same time, what is gold doing? Gold is taking out these equalos on the daily. Okay, so even though gold necessarily didn't have a nice structure shift like silver, this is how you can use correlated assets to get into gold, or to get into a different pair. So maybe it's Euro USD, GBP USD. GU might be showing bullish structure, but maybe EU is not necessarily showing that structure cleanly. Okay, you can use GU as a timed entry to get into EU. Same thing here. You can use silver as a timed entry to go ahead and get into gold. Okay, and this is how silver obviously played out. Okay, structure shift, low to high, buy the optimal trade entry, and where you're now holding to these highs up here. Okay, so silver actually, guys, once again, I trade CRTs. Um, silver is actually in a CRT right now. Okay,
I want to explain
so I got.
CRT.
All right, yeah. So CRT, guys. So CRT is called candle range theory. So essentially, it's best used on the higher time frame, but you want to look at each candle as a range. Okay. So we have this candle right here. We have the high of the candle. We have the low of the candle. Okay. We see the next candle is an inside bar candle, meaning that it didn't necessarily take the high or take the low. It's just in between this range. Okay. Now, what you want to do is you want to wait for price to either take the high out or take the low out. In this case, price takes the low out of this candle, but fails to close beneath it. Okay. That right there activates the CRT. Okay. And now with that, with price taking out this candle's low, there's a high probability that price can go take out the candle's high. Okay. If it's a weekly CRT, you want to use a 4 hour price market structure. So now in this case, this is that candle's low. We stab out the candle's low. Okay, nothing to do yet. You're still watching. Okay, this takes out. Now we're watching this high. So obviously this is a weekly CRT. It took like 2-3 weeks to play out. But once we take out this high, low to high, you're being patient. Once price comes in here, okay, you're now watching for that higher low. We need price to go ahead and form that swing low, and then that will give you confirmation that price now wants to go take out this high, and obviously we have all these highs over here. Okay, so that is what a CRT is, and that is my main way of trading. And then also with that, you can see that we had this nice bullish engulf an order block, this bullish order block down here. Okay. So with that being said, I have silver going all the way up here. Okay. And that correlates with gold because if I now go to gold, guys, gold is now also in a weekly CRT as well. We have this candle, we have an inside bar candle. This candle takes out this low, fails to close beneath it. The next candle, weekly candle, even goes deeper and takes out this low and fails to close beneath this low. So now with this weekly candle closing bullish, high probability that price wants to come take out this candle's high right here before reaching over here. Go down to the daily time frame. Okay. What am I now looking for, guys? Remove this. Remove this. What am I now looking for? We had this nice daily fair value gap here. Check this out, guys. This is how I read institutional order flow. We had this nice daily fair value gap over here. Look at how price came in here. Pushes price all the way down to take this low out. The moment we have now closed above this daily fair value gap, we are now bullish. And now we have a daily order block. So this last downward close candle to take out this low and this low, once we close above it, that is your daily order block. Okay. So not only do we have a daily order block, we also have a daily fair value gap. Okay. So I'm waiting, simply waiting for price to drop. Okay. We also have a nice 4-hour breaker. So a breaker is, in this case, this is will be a bullish breaker. A bullish breaker is, this is the structure high that pushes price down to take out these lows. Okay. The moment we close above this structure high, we can now use this area as support, which is basically a breaker. So this breaker aligns with this daily order block and a daily fair value gap. Okay. And we also have this nice 4-hour inversion loot zone. Now, on top of that, guys, once again, robotic, low to high, we're not up below the 50%. Nothing to do here. No buys. If price starts taking off and buying, cool. I'm not going to participate. But for me to buy, I want price to retrace. Look how the 50% aligns with that daily order block. Okay. Price to drop, start consolidating, nice little structure shift on the 15-minute or something like that before we finally find our way back up. Okay. So this is what I'm looking at. And also, we also have this nice 4-hour order block down here, which aligns with the optimal trade entry. So that's my analysis for gold. Basically, hoping Monday, Tuesday creates the low of the week. Wednesday, Thursday, we rally, making the high of the week. Then Friday just retraces and closes. Okay. That's what I got, guys. So just, once again, be patient. And let me go ahead and turn it over to Colossal so he can talk about DXY and then NQ. All right, solid. Take it off, man.
I'll break down 1 second. Let me share my screen. Okay. I think it's this one. There we go. Okay. See my screen? Oh, I'm not even talking. Am I?
Yes, sir. Yes, sir. Yes, sir. We see your screen.
Cool. Perfect. I'm gonna minimize this. By the way, guys, I'm just sitting here wanting my team, soccer team, to win. We're playing right now. Actually, we got 3 more games. If any of you guys know about soccer, Premier League specifically, okay. My team is Arsenal. We haven't won a trophy in 22 years. All we gotta do is win the last 3 games, and boom, we got that championship. So that being said, I expect we're gonna do that, and I expect this week to be a great week as well. So first things first, first order of operations. Obviously, Valentine looked at um, your economic calendar, which is very important, so you understand the days you want to trade. The importance of the economic calendar, which was on forexfactor.com, is those days that have high impact news or medium impact news, those are actually the days you want to trade because that's when volatility is going to kick in. It's very important that you always look at your economic calendar to get a sense of what price like to do and the days that are high probability and days you want to actually be in the market. Okay. Now, they like CPI, you want to stay out the way just because it's super volatile. But typically, if it's a red folder or orange folder on forexfactor.com, whenever you go on there, just filter for that. Those days essentially are the days that you want to pay attention to. So you want to trade. So that being said, let's just get into dollar. Again, from a weekly perspective, nothing has changed from a weekly perspective. I've been mentioning this order block as a level that should support price. So until we disrespect this order block from a weekly perspective, I am expecting some bullishness to eventually kick in. Okay, this is on dollar. Again, dollar is your king or queen of the market. Typically, if the dollar is going up, it means risk off, meaning individuals or investors or businesses are putting their money in the dollar and not into any, if you want to call it, risky assets like the Nasdaq or the S&P or stocks or cryptos. So when dollar goes up, it just simply means every other thing typically should go down. It doesn't always work as on a one-to-one basis, but that's just kind of how you should understand and look at the market in terms of correlation. So from a weekly perspective, I will expect to bounce eventually, and we're sitting right here. So I want to see if this eventually does take off. Now, daily wise, I have all these notifications pop up on my phone. I wish I could turn these. Can I turn these off? Let's see. Mute for 8 hours. I don't want to see nothing. Sheesh. Cool. All right. Sorry, guys. Now, from a daily perspective, so daily perspective, we have these low. This low right here. In terms of what I'm expecting now, because that weekly chart will take time to build up and make its way higher. But if you look on a daily chart, we have a lot of liquidity building up. We have lows. Liquidity are essentially levels where they're obvious levels, right? Where the market has shown support, support, support. What that does, it attracts basic retail knowledge that traders to want to buy once the price goes here. As much as we don't trade dollar, again, it gives us indication of what we can expect on other assets. So since this level is like a nice support, 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 and we have this low here as well, I'm expecting price to drive lower for the first half of the week. So I'm really expecting dollar to find its way lower for maybe Monday through Wednesday, and then perhaps Thursday, Friday, we start turning around. That's my expectation. As long as we stay below this order block here on a daily chart, I'm expecting to run below here. So run below 97.388 are my expectations on dollar. Go on the 4-hour chart. Again, I like this far fair value gap here. Yes, it did come out, close above it for a second, but it did close above for a second, but we eventually closed back down. So I want to see a run below here. You go on your 1-hour chart. Okay. 1-hour chart. I like how we have this low here. Again, it's important that you understand this. This is important. Anything you're trading, all right? The big moves do not take place until there's a run on liquidity. So that's why if you're ever trying to enter a trade, whatever method you use, try to consider around liquidity first. Expect that first. So for example, here, there's a nice little high here. Sorry guys, let me just turn off these notifications on my phone, on my laptop. Everything just popping up. Or not, I gotta red heart. I gotta re-explain this. Sorry guys. So it's a lot of notifications popping. I kind of connected my phone to my computer, and Lord, this is the worst thing ever for me. Like so many notifications pop up, it's distracting. You might not see, but I am seeing it. So just going back to make this very simple. Whatever you're trading, you want to expect around liquidity first. So you see these highs right here. even though I'm expecting a run lower, and it could just go lower. A higher percentage trade or the trade I like to take, I'll feel better if we have a run on liquidity first, take out these highs first, because then that gives smart money the opportunity to swap hands. Meaning there's already folks that are short here. So run here, we'll take out some liquidity and then stage some shorts to go lower and take us into this weekly order block down here and around this liquidity pool right here. And again, deeper into this daily fair value gap and potentially again to take out that 98 point, this level right here. So that's what I want to see on dollar. Okay, 15-minute chart again. All this whole level here. Can we just run that high and then find our way lower? If we get that, I'm gonna be interested in taking shorts, and I wouldn't want to see price come above these highs. This is a nice swing high. The way I look at it in terms of going back to what Valentine explained, you want to take trades above 50%. This range from this high to this low here, this high to low, above 50%, you see what liquidity pool resting here. So you want price to run into that, ideally. And then you can also see a potential fair value gap up here. Okay. So that's my expectations there. Just run above these highs, exit out those are already short, and then drop lower. And if you look at this, if you kind of zoom out, this is what you call a market maker sell model. If you zoom out, this is what you call market maker sell model. Essentially, you can see a consolidation here. Price goes higher, retraces, goes higher, hits a key level, this 4 hour level, consolidates above it, and then comes back below it. And now we're breaking down. So essentially, a market maker sell model is you want to see a buildup of buys, 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 and then it turns around has sell, sell, sells. And each area that had buying take place, for example, there's buying that took place here at the consolidation, it moved price higher. There was buying here at the second stage delivery, it moved price higher. On the opposite side of the spectrum, you want to see sales then take place. So you see price comes down here. Where does the stage of sales? Right where previous accumulation took place. So you see that sale take place. And now we have this consolidation going on here, right where it consolidated previously. So ideally, if we don't get an immediate run here, I want to see us run back higher, right? And still stage some more sales that also coincide near these sales over here. You see that? Or near these buys over here. So that's exactly what I want to see. Can we run back higher, stage some sales that'll still coincide with a previous level of accumulation that'll then drop dollar lower. Now, if we make our way higher and break above these highs, then my stance will change on the dollar, and I'll expect to run on these highs because at the end of the day, these highs are smooth highs. Okay. All right. Now, what's next? Let's go into. Let's go into euro. So again, euro expectations are, again, this was last week. We're just playing between these two levels. We have this volume imbalance here, a weekly fair value gap here. Okay. This is really a fair value gap because, again, this candle is high and this candle is low. There's a gap in between there. This level is inefficient. So it's a fair value gap. Meaning if price comes down, there's fair value for smart money to want to buy and then push price higher. Here's really a volume imbalance. So I'm going to actually change this and label it properly for you guys. Okay. A volume imbalance is a type of fair value gap, but it's really more of a volume imbalance because there's no candlesticks at all that traded in between here. No bodies. Notice I here had a body. Here just has empty space. So because there's empty space, that level also becomes sensitive until we lay a body over it, right? But the fact that we haven't done that, you can still expect price to constantly want to come back in here. So being that dollar, I'm expecting to be bearish first half of the week. And last week we didn't even get into this level. I want to see us find our way to this weekly fair value gap, and then we'll see if you want to take out these highs. Daily chart. Again, look at the daily chart. This is a change of delivery. This is an order block right here. This price makes its way lower first, tag this order block, and then go higher. That's what I'm expecting. And if we go higher, take out these highs, take out this high. What am I really watching for? There's a fair value gap level right here. So price can take out these highs and take out these highs over here, which you're going to see on the lower time frame. That's what I want to see on euro. If we get that, then do we start turning around? We'll see. But in the near future, I want to see a run higher. 4 hour chart. Okay. I have this level here, but I expect it to break. This is a 4 hour fair value gap. And typically, when we see these levels, we want to see resistance take place. We want to see price being held there. But in this scenario, I'm actually expecting the price to eventually climb above that, use that support, and then go higher. So I'm just going to leave it on the chart. But again, going back, notice the daily order block is down here. So this is the level I want to execute on. So I want to see price find its way lower first. So here, maybe act as initial resistance, trade back to this daily order block, and then take off. It does not need to go below these lows. I'd rather not see that. I'd rather see just come back here, nice little retracement, nice little pullback, and go higher. You go on a 1 hour chart. Again, 1 hour chart. You see now you see this nice full liquidity. Back to what I told you guys. I want to see a run on liquidity before I see any major move. So the fact that we have this low just hanging here, price running down here is solid. A lot of retail traders, just basic knowledge, once they see a nice little wick like this or a single low, they'll put their stop loss below here. When I first started trading, I'll definitely put my stop loss below here. Okay. Because I see it's rejected. It's a nice single low. Price is going higher. I would want to see price come back below here. So if I was in buys, my stop loss would be here. I protect my stop loss here. However, what we can see is price make its way lower to then knock those out. This is just easy liquidity for the market makers to take and then still formulate highs to then push price back higher, especially if we don't take out this high here. The fact that this high is still in place, if this high stays in place and we start pulling back, guys, be very aware that this could easily turn to a nice turtle soup, meaning around liquidity, and then a reversal level to then push price higher. So I'm really watching that 1.1770 level, if you want to call it that. And I want to see what price does around here. If we get a nice reaction, then take price higher. And then furthermore, this level here previously acted as an elevator that pushed price down, that pushed price lower. So this to me has inverted. It's now an inverse level, meaning as price has traded above it, I want to use that support, which it did here. But I want to see perhaps take place again to then trigger some buys to then push price higher. And again, no one knows where Sunday's open. This is very important to also know. We don't know where Sunday's going to open. So this is price is closed right now. Sunday opens at 4 p.m. I think Central Time. It could gap up higher. And then what I just said, in terms of price coming back lower first, will probably be invalid. We don't know how Sunday's going to open. Just important to note that the price easily just gap up higher. But I would love to see this thing gap lower. If this thing gaps lower, man, I would love that. If it gaps lower and then drops in here, I would love to take those buys and really push price higher. That's what I expect. So hopefully we get a gap lower. Price makes its way even furthermore lower, making people think this is a resistance level. And then it turtle soups this low and it makes its way higher. Okay. Because a lot of liquidity resting here, resting above here. This high, of course, this is a clean liquidity pool right here. And, a lot of liquidity be resting there. If I'm short as well, again, going back to if I'm short, where will I put my stop loss? That's what you have to think about. Where would you be protecting yourself? And one area I'll protect myself if I was short will be up here. Okay. So I put one, maybe stop loss here, and someone put theirs here. So this level to me looks enticing. And if you zoom out, this is just a very, very smooth area over here. Nice little box of consolidation. Can we run that out? So that's what I'm expecting on Euro. I want to see. Do I want to touch on? I'm going to touch on pound because this is counterparty. Okay, then pound, kind of the same idea, right? Let's just go on the daily chart. We're going to start with the daily chart. Daily chart, maybe we go to weekly actually. Weekly chart, we have these highs up here. I don't know if you're going to go all the way up to these highs, but if you look at the daily chart specifically, this high looks like easy pickings, right? Let's just run above that real quick. Like if you look at its price, you want to look at price as a painting. So there's a reason why fair value gaps are important. Essentially, at every level in price, ideally, for price to be delivered efficiently, you want to see buys and sells, buys and sells, buys and sells. Okay. Like, for example, here, this little gap here was not delivered efficiently, even though price kept going, right? Because it's just buys and then buys. But notice left a gap in here. And what did price come back to do? Sells, sells, sells. So it covers this whole area like a painting. Like It covers the gap that's left in price with the opposing candle just sells, and then we're not able to take off. Here, same thing, right? You see these sells and we had this big buy. Okay, price needs to kind of again cover in this little gap with what? A sell candle, not just go in here and create these. You want to see sellers sell candle take place because then it paints the picture fully. Because it goes sell, sells, then buys. Leaves a nice little gap in here. This is why it's called fair value gap as well. You want to see price paint there with a bearish candle as well to make create this a balanced range and then take off. So that's why I don't really see a reason for price to start coming back below here, unless we're just going to aggressively run below, right? But this whole area to me has been balanced. So at this point, a minor pullback is acceptable, but after a minor pullback, let's then blast off higher. 4 hour chart, nothing really exciting here, if I'm being real. Just the fact that we have a lot of highs here. And when you see levels that are obvious, highs like this, right? You understand that retail logic says that's resistance and we should sell. That's basic retail. All retail traders, but the basic of basic retail knowledge typically gets exploited. So whenever you see these highs like just hanging there, they're smooth. We haven't had any disruption on these highs. I expect that to get ran out every time. So that being said, these highs look good. I want to see price eventually make its way there. If it drops lower first, beautiful. I will then expect those buys to take place, right? Especially at this daily order block level. 1 hour chart. Again, we have these lows here. This price will drop lower first into this fair value gap. As long as that holds, expect these highs to get tagged, guys. So I want to see this drop here, pull back, and then take out these lows and run higher. And I think if you also look at it from a Fibonacci standpoint, yeah, this is below 50%. So as long as we get a run below here, I'll like that. I'll fancy that. Okay. I think that's what the British say. It could be wrong, but I'll fancy that run lower and then expect price to go higher. Okay. 15-minute chart. And then look at this level. Again, I wouldn't expect it's very similar to dollar and gold, right? Because I mean dollar and euro. I wouldn't expect price to run below here. I like this little anchor point right here. So price runs here, cool. We don't need to see it stage run below here. I want to see this level hold and then push price higher. Higher. Okay. That's it. Very, very simple, straight up on euro and pound. And then NASDAQ. Again, this thing makes zero sense. Okay. We are on a verge of an oil crisis, a verge of another pandemic. Jobs are being cut left and right. AI is taking over. And we're just seeing this thing go higher and higher. Well, you know what? Maybe it does make sense. And this just came to my mind. As much as jobs are getting cut, what is replacing the jobs? Supposedly AI automation. Supposedly, if we're going with that narrative, that means companies are cutting costs, but yet increasing productivity. So, from a different type of perspective, yeah, I mean, I guess they're cutting costs and increasing productivity. Perhaps it makes sense for this to go higher, but that's just one logic. And then obviously, but it doesn't make sense if I'm being real. But that's just one logic. We're trying to use that thought process. Maybe investors are like, you know what, we're seeing across the board that AI is cutting costs, um, and productivity is increasing. So that's actually going to increase profit margins. So therefore, we should be bullish on this. Perhaps that's one narrative, but overall, with oil prices again, I'm just not a fan of this thing. It's literally just going higher. I think this is obviously Trump's administration wants things to keep going higher. Like this is makes no sense. And this took place. I want to say these lows took place after I want to say ceasefire was brokered. I want to say ceasefire took place, and it's very ironic how April 1st, April Fools, that's when this thing started going higher. So a lot of funny stuff going on with this chart, but Nasdaq just constantly pushing higher. And I don't really see it pulling back, especially now we have dollar bearish in the interim. So do we ever see this pull back? I don't know. No one really when you're trading at all time highs. I don't care what trade and no trader is able to predict what happens after that because you have no structure to the left to deal with. Typically, when there's structure to the left, you have an understanding of what could take place. When there's no structure into the left, you're trading in uncharted territories. It's really harder to have some clarity. All you can expect is maybe a pullback and continuation higher until that trend breaks. But when there's nothing to the left of the chart, it's harder for you to make any sort of strong predictions except for understanding that price probably keep going higher. That being said, Nasdaq is a little bit far gone. A little bit. I do want to see S&P. I think S&P has um, a level that I think I like. So look at S&P again. Still bullish. Daily chart. I don't know why I have this here. This must not be the one I marked up. I just said I didn't mark this one up, but let me just delete this real quick and kind of show you guys what I'm expecting. Make it very, very simple. Daily chart on S&P. This is all I see because again, this is also all-time highs. The only thing that's not at all-time highs as index is US 30. And we're waiting for that to eventually happen. I think US 30 eventually will make its way higher, but it's just important to also note it has not done that yet. Anyways, this level here is only FIC. Okay. This level I only see that price can pull back to, then maybe make it higher. You go on a 4-hour chart. 1-hour chart. What I do like, what I would like to see, and I will consider going bullish as long as the intraday triggers are there, which is what a break of structure at the right time. Okay. I want to see price makes way lower, take out these lows, and then find support here, and then continues to go higher. So I'm more interested in S&P. But what Valentine said, which is you can use a correlated asset to kind of gauge or find an entry on a different pair. So the fact that Nasdaq's far gone, when S&P pulls back here, if I like Nasdaq's intraday price action, I can perhaps find a reason to go long as long as you have again nice break of structure and a fair value gap. That's all I like to look for: break of structure, fair value gap. So in this case, I want to see S&P make its way lower first, and then hit its order block, and then take off. So I mean, that's really it from me. I don't really have much more to add to that. I think that's very comprehensive, very simple. Um, I don't know, Valentine, if you wanted to add anything to that, but
No,
that's
so
pretty much
solid
it.
analysis, man. Solid analysis. So, guys, once again, CPI on Wednesday. If you're bullish, you want to look from Monday, Tuesday to form the low of the week. Wednesday will hopefully rally. Thursday rally, then Friday retracement and close. So, that's the anticipation for this week. And Wednesday, we'll come back here and give you guys a midweek analysis. Other than that, get ready for the week, man. I think we're gonna have a nice week.
Yes, sir. Let's do it.
All right, cool. All right.